Yeah, I think it's really positive to see how well the markets are recovering so quickly here. And I think realistically, it's just showing that all the volatility we've had over the last month or so is nothing more than a run of the mill correction that we tend to see once every 12 months. But I do think we'll probably continue to see some of your longer duration assets like your tech firms reprice as interest rates do continue to rise. So we're really making sure that our investors are looking at good opportunities as we look forward this year. And I think one thing we're looking at is we're likely going to see this big shift in consumer behavior where it's not just goods that we're buying. It's now going to be things like leisure, hospitality, travel. It's that services sector that I think we're really wanting to look at here. I think airlines, for example, can be a really good way of playing that. So just looking for some of those opportunities here as things are shifting means take advantage of those deals as they're still happening.
Joe, usually when we're talking about the 10-year yield flirting with 2%, it's not in a very positive context when it comes to the tech trade. And yet today we did see that surge into the close. I'm wondering what you make of some of these individual moves, because we still have weakness, particularly in Facebook. And as for Alphabet, we're pretty much back to the pre-earnings levels. So it's basically erased that big giant pop that it had.
Yeah, and I feel better seeing the price action today because today wasn't so much about the mega caps. There was a strong tone to Apple and to Microsoft. But overall, Melissa, it seems as though the welcome mat is out in some unique places within the capital market structure that it wasn't previously. And we're seeing now cyclicals and financials get very strong bids. Small caps, which previously had been the weakest link of the major indexes, they're performing strong. I read a positive note today from Goldman Sachs on Europe. Wow. When was the last time you read a positive note on investing in Europe? So the welcome mat is out in other places, and I like that. Maybe 2022 doesn't have to be all about the mega caps.
No, how about Deere closing up 5%? And a lot of the strength, Mike, in materials today. You're long, Joe. So AGCO, I guess a competitor, had some strong earnings. Yeah. Aluminum prices are at 13-year highs. And this is also a message of strong economy, which, you know, there were concerns in the last few weeks that the Fed was going to take us into recession by hiking interest rates at a time where fiscal stimulus is wearing off. Is this a signal that the market's feeling differently about that story?
Yeah, I think it's the market is reading it as a very compressed slowdown. First quarter GDP, if you look at the tracking models, doesn't look good, but nobody thinks that really matters. It's kind of a little bit of a give back to a very strong nominal growth last quarter, and at least the parts of the economy that can operate in this reflationary world that really do have end demand that's strong, and you have supply constraint. That applies to a lot of stuff in the business-to-business world in terms of industrials and things like that. Yes, they're working just fine. I don't think we're talking about off to the races for earnings, because there could be a little bit of slippage between how the economy does and how corporate earnings does, because there has been just a massive build-up toward record profit margins to this point. So, yeah, I think the market right now is pretty happy with rates going up when the economy seems like it can still have some good traction.
Well, it seems like the message under the surface of this market action, Courtney, could be that the markets believe that the Fed can actually be effective in fighting inflation with higher rates. That seems to be the all clear at this point, at least when you take a look at what moved today in the face of a 10-year Treasury yield at 196.
Yeah, and I completely agree with that. I think seeing all this positivity just means a lot of this has probably already been priced in. The markets have really digested this news. And realistically, with interest rates where they are right now, we're still barely back to where they were pre-pandemic levels. So it's not like we're seeing interest rates skyrocket. I think that would be something that's going to spook the stock markets a lot more. But rates will probably continue to rise, and the markets just need to get on board with that, which just seems like they are. And that's a very positive sign.